Big concern for people at the moment is investing in the stock market when it's at all-time highs. On the one hand, many have missed the boat and missed the opportunity to get 40, 50% returns on their pension over the last 12 months alone. And others are worried that if they are on that boat, is it going to fall off a waterfall, as it were? Well, it's a couple of interesting images I want to show you now. Look at this first one. And this is what happens to returns if you do actually end up investing on a day which is the all-time highs. Well, over a one-year period, on average, you get about 14.6%. So it's not a negative return, which is what many might expect. Over 3 years, 50%. And that's if you're just tracking the index. What happens if you just invest on any random day? So assuming it's not, obviously, then an all-time high day, well, you get slightly worse returns. In other words, it makes more sense to invest in an index at an all-time high. Of course, history is no guarantee of the future, but there's one more image I want to show you as well, which is even more impressive, partly because it comes from a team, from an individual who I've written about many times in my various books. You can see over my shoulders in my Financial Times columns as well, before he won the Nobel Prize in economics. And that individual is Eugene Fama. This is from him. And what that shows is, for those of you who want to wait for a market decline, which I'm sure many of you do, then the 1 year average cumulative return after a 10% market decline is about 11% in 1 year. Over 5 years, it's 67%. But here's the rub. If you wait for, and there's no guarantee you're going to get it, if you wait for a 30% market decline, so those of you who've seen the train leave the station and roar upwards in the stock market and are waiting for it to come back to the platform, well, should it come back to the platform and give you a 30% market decline, then you get a 50% return over 5 years. So in actual fact, your ideal scenario is not a 30% decline. It looks like it's about a 20% market decline. Far more reasonable. Do you wait for it? Or do you just say, you know what, if that comes, I'll invest more. But even if the market is at all-time highs, I'll just invest now. Well, for me, I'm in that latter camp. All-time highs, I'll invest. If it drops 20%, I'll invest. In other words, I'm an investor for all seasons. Hopefully you found that useful. Have a look at my campaign for $1million.com to teach 1 million people how to be better investors. A ton of free resources, including downloadable links to my books as well, all for free.